All right. So review engagement, it says the objective of the accountant when performing a review of statements is to obtain limited assurance. Yellow in the word obtain, because it used to be provide limited assurance. We don't provide it, now we have to obtain it through our increase in analytical procedures. That's one of the ways that they rewrote this. As a basis for reporting whether the accountant is aware of any material modifications that should be made to the statements in order for them to be in accordance with the applicable financial reporting framework, primarily through the performance of increase in analytical procedures. So what I want you to see is you need to remember, and that's what this last paragraph, the accountant's conclusion, that is going to be the paragraph that basically says that based on our review, we are not aware of any material modifications that need to be made to the accompanying financial statements in order for them to be in accordance with GAAP or with whatever framework. That is the accountant's compliment. And they will ask you that, and that terminology you should remember the way it's phrased. Again, based on our review, we are not aware of any material modification that need to be made. What if you become aware? With the exception of the following paragraph, except for the next paragraph, we are not aware, and then in the extra paragraph, you'll show how you are aware of non-GAAP. We'll look at that later as an emphasis of a matter type report. Talks a little bit about materiality, that it's not addressed in SSARS, okay, but it just talks about what he's still concerned with. If it's something that's significant enough to influence the user's decision, that's considered material or significant. Judgments about materiality are affected by the size or nature of the misstatements. Judgments about matters are basically based on consideration of the common financial information needs of the users as a group. They're just kind of defining what materiality is, which we've already done in previous sections. What are requirements in the review engagement? First of all, just like the others, you've got to adhere to the SSARS ARSC 60. Those are the general principles which we've talked about. The statements, ethics, professional judgment, conducted in accordance with SSARS standards, which means you need to be familiar with the standards that relate to the service or engagement you're performing, and quality control as well. Dropping down, we've got if the accountant is required to be independent. If you're not, bye-bye, withdraw. Time to leave. Who sang that? Was that NSYNC? Bye-bye, Justin Timberlake, little JT. All right. In addition to prior to accepting the engagement, the accountant should obtain the client's agreement that it understands and accepts responsibility for the preparation and fair presentation of the statements, to provide the accountant with the letter of representation at the conclusion of the engagement, which is your management rep letter, and to include the review report in any document containing the reviewed financial statements. Here's the engagement letter, talked about the elements, all the same, addition, the expected form and content of the review report. Coming back over here, what was in the letter? The objective, management's responsibility, accountant's responsibility, limitations, identify the applicable framework, and boom. Here, expected or non-GAAP. Here, the expected content and form of the report, compilation report. Here, of the review report. So again, that's great. We're just building on stuff we know. What does the review report look like? That's where we have to get into this, which is the meat of it, which is the 4 different paragraphs. All right. First of all, the title, which has the word independent. Independent Accountant's Review Report. And remember, it's going to have the word independent because you have to be independent or you can't do a review. In a compilation, you generally will include that. You don't have to have a title, but you will, usually. And when you're not independent, obviously you get rid of the word independent. Appropriate addressee to the board of directors of EXCO, stockholders of EXCO, whatever. Then, the introductory paragraph, which doesn't have to have a title, but you can, that is the introductory. Now, introductory, remember that? Cheerleading in high, introduce yourself. My name is Roger, yeah, my name is Roger, right? So that's what we're going to do is introduce ourselves. So the introductory paragraph, let's just look at, well, all right, introductory. Identifies the statements that are reviewed, states the statements were reviewed, indicates a review is inquiry and analytical procedures, and states that a review is less in scope than an audit, and accordingly no opinion. Here's what it's saying. It says a review is less than an audit, the purpose of which is an opinion. Accordingly, we do not express an opinion. So in that first paragraph, you're basically mentioning we've reviewed, you mention the statements, you mention that a review is what? IA, inquiry and analytical procedures, and it's less in scope than an audit. We do not express an opinion. Second paragraph, management's responsibility. We're going to mention that management is responsible for the fair preparation and fair presentation of the financial statements in accordance with generally standards generally accepted in the United States. We're going to mention DIM, design, implementation, and maintenance of internal control. relevant to the preparation and fair presentation of the statements, and that they're free of material misstatements, whether due to error or fraud. So what we're talking about is we're addressing internal control here in this report. So we're addressing the fact that that is what? Management. So management is responsible for the framework, the fair presentation of the statements, and design, maintenance, and design, implementation, and maintenance of internal control, and to make sure that it's free of error or fraud. Our responsibility is to what? To conduct the audit in accordance with SSARS by the ARSC of the AICPA. So again, that's what we're doing. Our job is to obtain limited assurance as a basis for reporting as to, and kind of spelling it out, as to whether there are any material modifications that should be made to the statements in order for them to be in accordance with accounting principles generally accepted in the U.S. And then the last sentence, we believe that the results of our procedures provide a reasonable basis for our conclusion. What does that lead to? Your conclusion. So the conclusion is your last paragraph. So that conclusion leads to the last, called accountant's conclusion. Based on our review, we are not aware of any material modifications that should be made to the accompanying statements in order for them to be in accordance with the accounting principles generally accepted in the United States, so whatever the framework is.